How to know a good stock to buy. Most of your financial advisor will not tell you this. I'm about to change your life now. I'm about to show you how to know a good stock to buy. If you want to invest in stock, this is the only video you need to watch. If you watch this video to the end, you'll be able to know stocks to buy by yourself. Many people that are seeking finance here don't want you to know this, because once you know how to do this yourself, you'll stop meeting them to tell you stocks to buy. In this video, I'm going to show you the things you need to look out for before you can buy stocks. I'm going to teach you how to figure out good stocks to buy. First thing you need to do is to go to this website, stockanalysis.com. This website is what I use to analyze stock. Stockanalysis.com. Just type it in your phone, it's going to come out. Then any stock you want to buy, you just type the stock on the website. So for instance now, you are contemplating between buying UBA Bank or Zenith Bank, or between buying Fidelity or a US stock. You don't know which one to buy. You can figure out the good one to invest in using this formula I'm about to teach you, using this step-by-step process. So when you go to this website, stockanalysis.com, you can search any stock in the world there. Any stock, whether US or Nigeria. You just type the stock is going to come out. Now, these are some of the things you need to look out for. I'm going to explain each of these one by one. Each of these, and I'm going to explain them one by one. These are some of the things you need to look out for to know if the stock is a good stock to invest in or if it's a bad stock to invest in. If you can look at all these things and get positive results in all of them, then it's a good stock to invest in. Let me explain them to you. The first thing you need to do if you search for a stock on this website, first thing you need to check for is the revenue. You'll see it there. Check for the revenue. What does revenue mean? Revenue is the total money that has entered the company, right? The total money that has entered the company. Revenue is different from profit. Profit is when they have now minus their expenses. So revenue is the total money. Then when you minus expenses, that is profit. You need to check the company's revenue and the profit. Compare it every year. You will see it 2023, 2024, 2025, 2021. Compare. Ask and check if the revenue and the profit is increasing every year. If the revenue is increasing and profit is increasing year by year, it shows that the company is a good company and the company is growing. That is a green flag. But if you see that the revenue or the profit is reducing, let's say this year is 20 million, last year it's reduced, instead of it increasing year by year, just know that is a big red flag. So that is the first thing you need to check, the revenue or the profit. If it is increasing year by year, it's a good thing. Second thing you need to check is the market cap. Now, what is market cap? Market cap means market capitalization. Market capitalization. In layman terms, it is what the company is worth. It is what the company is worth. Generally, the higher the market cap of a company, the more stable the company is. The lower the market cap, the less stable it is. That means it is more safer to invest in companies with large market cap. Now, when you invest in companies with large market cap, you might not make much money, but you have less chance of losing your money because those are companies that are more stable. But when you invest in a company with small market cap, you can easily lose your money. But if those companies want to grow, they will grow massively because they have room for growth. Generally, companies like UBA Bank, Dangote company, Tesla, Amazon, Apple have large market cap because these companies have been in the market for a long period of time. So when you invest in companies like that, they are more stable. Your chance of losing money is very low, but you will not make very much because they will not grow very, very fast and sporadically like companies with smaller market cap. So if you are investing for stability, it is best to go for companies with larger market cap. The more money you see, the more big the company is. Then the third thing you need to check is the earning per share. Earning per share. This is the amount of money the company is making per share of the company. You also need to check the debt. Now, if the earning per share is increasing year by year, it's a good sign that the company is growing. If the debt is reducing, it's a good sign because check if the money that the company is owing, are they paying it? Is it reducing every year? Is their debt level reducing? Is the earning per share increasing? Check it, compare it. You are going to see everything there on this website, stockanalysis.com. All you need to do is to observe and check. Is the earning per share increasing? This year you see 30%, the other year you see 40%. It's a good sign and it's increasing. It shows that the company is a good company to invest in. Then you also need to check the dividend yield. Dividend yield. Is the dividend yield increasing year by year? If it is increasing, it shows that the company is growing. But note, it's not all company that pays dividends. And the fact that a company doesn't pay dividend doesn't make it a bad company. For instance, now Tesla doesn't pay dividends because they reinvest their profits back into the company for growth. But Tesla is a good company. That is the decision of the board and the management. But some companies like to pay dividends. Those ones that pay dividends, check if the dividend yield is increasing year by year. If they are paying more dividends as time goes, it shows that the company is increasing and they are making more money. Then you also need to check the management of the company. Now, this one is very, very important. Who is the person in charge of the company? What is the how is the person track record is? For instance, now, before I invest into a company, I look at the person. In the Nigerian stock market, the companies that give me the highest money are companies that are owned by Tony Elumelu, Transcorp Hotel, and UBA Bank. So I like investing in Tony Elumelu's company and product because I believe in his person. In the US stock market, I like investing in companies owned by Elon Musk because I believe in his person. So look at the management, look at the CEO of the company. You see everything on the website. Look at the owner of the company. What is their vision like? How is the person? Does the person promote the business? For instance, Elon Musk always carries his product on his head. He always promotes his business. Tony Elumelu, you see him on social media promoting his business. Does the person carry his business on his head? Because when you are investing in a company, when you are buying share, you are not just buying share, you are investing in a company. You are investing in a person. So you must make sure the person is passionate about the business. Then you also need to look at this. This is very important. 52 weeks high or low. 52 weeks high or low. Many people don't understand this. And this is why many of you lose money from the stock markets. Now, 52 weeks high means the highest amount the stock has gotten in the past 1 year. A year has 52 weeks. That's why it is written 52 weeks. 52 weeks high. Anytime you see 52 weeks high, it means that that is the highest price the stock has gone to in the past 1 year. For instance, UBA Bank now, if you go and check the 52 weeks high, you can see it as 15 naira. It means that in the past 1 year, that is the highest price UBA Bank has gotten to. So as an investor, especially if you are investing for the short term, it is wrong to buy a stock when it is at its highest point or close to its highest point. Because what will most likely follow at that point is crash downward because people will not take profits. You understand? So except you are investing for the long term, when you see that a stock is close to its 52 weeks high, it is best to wait for a retracement before you invest. Right? The same thing happens for not just stocks, any assets, even crypto. When you see that a particular crypto is at its all-time high level, it is best to wait for a retracement before buying, except you are buying for the long term. You can buy at any point if you are holding for the long term. Because most times, even if it crash, it will recover and go more higher than it is current 52 weeks high. So if you are buying for the long term, you're a long-term investor, you can buy any time. But if you are going for the short term, it is best to wait for a recovery before investing in stocks or crypto. Now, the next thing you want to check is the industry. What is the industry the company is like? The industry, if the industry is growing, the company will likely grow. For instance, one trading industry right now is the AI industry. Artificial intelligence is trending right now. So it makes sense to invest in companies that are AI related. One trading industry in the Nigerian stock market is the banking sector. The banking sector is a very, very hot industry in the Nigerian market right now. For instance, one of the reasons a lot of stocks in the oil and gas sector boomed last year was when oil subsidy was removed. So any news that is affecting a particular industry will affect stocks in that industry. So you also want to look at the industry. How is the industry like? The industry the company is in. Some companies are in the pharmaceutical industry, some are in the food industry, some are in construction industry. So what is the industry like? What is government policies like? Is the government policies favoring that industry? You need to ask yourself that question. Then finally, you want to take the risk involved. Now, before I invest in any company, this is what I do. After doing my research, I'll go to ChatGPT and I'll ask ChatGPT, what is the potential risk involved in investing in this company? I will tell ChatGPT to tell me every possible risk involved. You read out the risk. If it's something that you can bear, then you invest in it. If it's something you can't bear, then don't invest in it. Right? So you need to know the risk involved. in investing. Government policies can come tomorrow and it will affect your investment. Anything can happen to the management of the company and it will affect your investment. You need to know the risk involved. It will give you knowledge and foresight. For instance, there are some things that will happen in the crypto and stock market that I won't panic because I'm already expecting it, right? Instead, I will now position myself to mitigate the risk and to take advantage of any opportunity that might have come at that point. So you need to know the risk involved before investing in a stock or in a crypto. And you can use AI to predict that for yourself. It might not be 100% accurate, but it might give you an idea of the things to come. So these are some of the things you need to check. There are more, right? But these are some of the basic things you need to check before you invest in a stock. If you check these things and you see green flag in all these things, especially revenue, market cap, debt, dividend yield, good management, then it is a good company to invest in for the long term, right? This is a good sign that the company will perform well for the long term. When investing in stock, the best way to do it is to invest for the long term. Forget about short-term volatility. Put your money, continue the cost averaging, and if you do it constantly for the long term, you are going to make a lot of money from the stock market. So if you want to learn more about stock investing, go and follow me. If you are watching this video on YouTube, subscribe to my channel. If you are watching it on TikTok, follow me. Then click the link in my bio for more information. My name is Doroka Otone, and God bless you.